Good morning, traders. It's now quarter to 11 EST. It's time to do the video on divergence. What a mess of the markets today. There's no news to move the price anywhere. So what can you do? You got to try and see through the chop or see the chop, and sometimes the best trade you could ever do is to not do any trades at all. Okay? So anyway, here's the open, 8 o'clock of the U.S. session. We chopped, and we chopped. And we came back up, and we put in another high and a higher high, which created divergence. Ladies and gentlemen. So right on the opening of this candle, let's put the arrow on there, right there. Let's just move that up. Okay, you would have got short. You would have had some drawdown. We always put our stops 5 pips above the most recent swing high in a sell trade, or the most frequent swing low in a buy trade. Okay, and the reason why I put my stops there, and I know where to put my stop, is because when divergence sets up, it usually they first take out the stops, and then the divergence setup appears on your chart. That's what's so beautiful about divergence, is we get into the trade after they took out the stops. The bloody bastards. Yes. So anyway, yeah, so if you would have got short here, your stop would have been up here, 50 pips. Did we get 50 pips? Wow, we got 50 pips, ladies and gentlemen. That's pretty good. That's oil we're looking at. Very choppy, okay? Now, let's look at the pound yen. Okay. Now, this is where I can explain to you how I see divergence in advance. Okay. When the market is putting in a lower low and a lower high, lower low, lower high, lower low, lower high, you know we're in a downtrend, right? So in order to see divergence long before it occurs, let me get a little sip of water. So when the market's moving down, it can be moving up too. When it's moving up, you're going to have the same thoughts in your mind, okay? But I'm going to show you this example right here. When the market is coming down, okay, and puts in a low, then a retracement, then a lower low, okay, right here, we're thinking, oh, we're going to get ready to buy. We're going to get ready to buy as long as there's divergence down here and here on the chart, okay? So let's just draw it in for fun. Just to say we're right here right now, right at the end at 7 o'clock, at the end of the UK session, okay? So let's just say, here we are, right here like this, and we're looking to buy. What are we looking to do first? Well, we're looking for a cross up over the 7. That's what I look for. But in this particular situation, okay, I also draw trend lines. Yes, indeed. Okay? And we don't have a trend break here. Trend line break. Okay? So there was no buying right here, because if there was, our stop would have been here and they would have come and got our stop. But I'm telling you, there was a lot of people buying right here. Okay? And they put their stops right here. And they came and got their stop. Then they took it up. You see that? Okay? So anyway. So obviously we didn't take that trade there. So then we do a little hop, skip, and a jump over here like this, okay? And let's see, where is that? Yeah. Oh, yeah, it's right there. Okay. Take that there. Take that over there. Okay, that's divergence, right? Okay, so right here, see this candle right here? This is the one that broke and closed above the trend line. Plus we have the 5 crossing up over the 7, okay? So our entry would have been somewhere in here, okay? Even if you wanted to wait and use a, you know, a buy stop order right here, this is where you would buy, okay? So put the stop down here, about 20 pips, and we got the 20 pips, okay? Pound yen moving very slow today, okay? So back to how do we see that in advance? Well, as it's coming down, you need to be thinking in your mind, okay, we're going to put in a low. I need to see a low, a retracement, and a lower low, right? And, or we need a low and a retracement and a double bottom, okay? So when you're thinking that in your mind as the price is coming down, okay, you know long before, right here, you know, when we put in this low, you would be saying to yourself, oh, all that we need to do now is wait for the retracement and then a lower low or a double bottom. And then we can wait for the rest of the criteria to set up, where we get a cross above the 5, above the 7, a break and close above this trend line, because there's a major trend here. It's a major trend channel here, okay? And it's the same thing when you go up. When the price is going up, now we're thinking, okay, when we put in a high, then a retracement, and then a double high, double top right here, now we're looking for the trade to get in, right? Okay, so our criteria, there was a double high here, there was divergence, okay? But our criteria to enter the trade did not happen, okay? So then we put in a higher high. Then we had the criteria, and it was a failure. All divergence does not work. So let me tell you, so we have the high and the higher high, and we have the high and the lower high, and there's the entry right there. On the opening of this candle, so if you would have got short there, our stop would have been around 18 pips, and it didn't go down 18 pips. It only went down 10. Oh, wow, my mouth's so dry. Yeah, so it went back up again. Bastards. See, they bought off of here and raced it back up again, then pulled back, and then it's just chopping, man. Chop, sloppy chop. That's all it is, okay? But that is the setup right there to sell, and that was a failure because it did not hit at least 1-to-1 risk reward. This is what I've always based this on, is because it works so well, like 7 or 8 times, sometimes 10 times out of 10, okay? I use a 1-to-1 risk reward when I do these kind of setups, okay? And that's it. That's how you see divergence in advance. When the market's going up, you wait for it to put in a high, then a retracement, then a double high or higher high. Then you wait for the cross down of the 5 below the 7, and you're looking to sell it. That's it. That's how you see it in advance, ladies and gentlemen. Okay, another thing I'd like to say is to prevent this selling right here, this is a 5-minute chart, okay? Because it's in an uptrend, when you have like a major uptrend from like say way down here all the way up here, it's not wise to probably sell it, try and sell it, because you're trading against the general trend. And how do you know about the general trend? Well, you just click on the time frame above, the one you're on, 15-minute, and see? You see how there's no, like it's crossed up from over here, the 5 above the 7. You see it did not cross down here on the 15-minute. This means the near-term trend right now is up, okay? like today, it's kind of a crappy example to show you. Actually, it was on oil. Yeah, I can show. Let me go show you on oil. Or no, was it oil? Let's just look back here. Hold on to yesterday. No, it's not yes. When I come to the example, I'll show you. So anyway, that's how you check to see, do I want to trade against the trend? Just go up to the 15-minute and check it out. You'll see. Same thing if you're trading the 1 minute, go up to the 5-minute and you'll see what the trend is. Don't trade against the trend. Trade with it. Otherwise, you could be in trouble quickly. Okay, let's look at the euro yen now. Oh, look at the euro yen. It's just awful. But it did a good trade right from the open, though. Let me show you quickly. Boom. And boom. And you would have got in here. Oh, making the chart jump. Big 12 pips was the stop, and it went up 21 pips. That was a winner. And after that, it just turned to crap. That's what today is. Today, there's no news. So there's no movement. Tomorrow, we have news. There's going to be movement tomorrow, I'm pretty sure. Okay, let's look at gold. Okay. Today, you get to see all my little scalp trades. Anyway, let me first show the divergence. I think there is some over here too, right? Yeah. Oh yeah, right here, and up here too. There's a sell here. Down it goes. Double bottom. See that? With nice wicks right off the main pivot level. Okay. So you would have bought in here, and up it goes. 75 points, pips, whatever you want to call them. Okay. Now, let's make it bigger. I don't usually cover this, but I just wanted to show you. Yeah, when you have something bouncing off a major support or resistance, it just increases your chances even more to succeed. Okay, so like I told you, on the way up, what are you thinking in your mind? You're thinking, oh, I need to see a high and a retracement and a higher high, and then wait for the cross down and enter to sell. That's a counter trend trade we're thinking about there. Okay? Okay, I'll show you the continuation of the trend in a sec. So anyway, same thing. It didn't do it here, and it went up. Now we're still waiting and thinking, oh, we got to wait for a higher high and a retracement and a cross down of the 5 below the 7. Didn't happen here again. Didn't happen here again. Then it went up here. Look at all these wicks up here. Woo-wee! Look at them, all them wickers. Wicks and sticks and yeah, all that. Okay, we got a high and a higher high, right? And we got a lower high on our indicator. So let me grab that arrow. Arrow is right there, ladies and gentlemen. Ladies and gentlemen, sorry. Like I told you, I have a little bit of a speech problem after getting the jabber. Yeah, the jabber. Let's just call it a jabber. Okay, so you would have got short right there. Stop would have been about 23 pips or so up here. And down we go. Down, down, down. 80 points to the bottom, ladies and gentlemen. That was a beautiful trade today, right from the open of the U.S. session. Okay? So anyway, one more setup. Let me show you. Just one more. Right up here. That's divergence, okay? So the reason why I got in this trade right here, even though I was only looking for a scalp, is because we had a cross up of the 5 above the 7, and we had hidden divergence to buy it. So you can see it was very short-lived. But if you would have got in here, let's say, it would be like 40 points. Oh, by the skin of your teeth, you would have got the 40 points. So anyway, that's why I did this first trade, okay, is because of the divergence. And the second trade I jumped in because we closed right at the top of this candle, okay, no wick at the top. And then it started moving up, and I go, oh, maybe we're going to go up here again. Didn't go up there. It was stalling. I got in. It was stalling right here. Once, you know, you just have these vibes, and you know how the market will always hesitate and hardly move and like sit there and like saying, hello, you better get out because I'm going to turn this around. So I got out. I got out like a freaking pip or something from the top. I got out like a pip from the top. Anyway, and then it came back down. Then they came to here. Then they rallied up. Anyway, and this one, I was hoping for it to go down more, but it didn't go. I could see it hesitating again. And there's divergence here too. Let me show you why I did this trade. It's hard to see divergence. Yeah, it is. It is. I can put it right up to there. There we go. And right there. You see that divergence? Maybe this is distracting you or diverting you. See, here's the divergence. This one's going up. This one's going down. This is the entry. And probably, maybe we're going to go all the way back down here to the pivot. Who knows? It's 11:02 now. Wow, I ever get a dry mouth. So anyway, I know you're all looking right here, and you're probably wondering about this. This is my little tool I had made. I actually had 2 different coders code it, okay? The first guy who worked on it was from Bulgaria, and very good coder, very good coder. And then I wanted some more stuff added to it and stuff. So then I had another, like years later, I had another coder. This guy is from Jakarta, Singapore, and he finished coding it. And he put the masterful touches to it, let me tell you. So anyway, this is one thing about MetaTrader. You do a trade and you got this stupid little X that you gotta go and try and click it, whatever. Here I just go boom, I hit the close button. That's it. Want to buy, choose the lot size, buy, sell, close. And if any of you are interested in getting a copy of it, just send me an email. My email's in the description below the video, and we'll talk about it, okay? So anyway, that's my little tool, and it's a great tool. Because MetaTrader 4 should have these buttons on your chart anyway. Do they do that? No. No. They don't want you to have quick access to get in and out of your trades. And believe me, it's very quick and very awesome. Okay, let's look at the pound now. Pound's a mess too. Oh no, it's not. It turned something else I was thinking about. So here we go. Price is coming down. What are we thinking? What are we thinking? We're thinking, oh, we're going to put in a lower low and then a retracement, and then a lower low, and then a low, and then a double bottom or a lower low, and up we go. Right? That's what we're looking for. Okay. First, there's a trade up here. It's like a triple top. Okay? Just wanted to show it to you. It's at the tail end of the UK session, and it's like that. Or like that, whatever. Okay, let's put on the doodah. Actually, the entry is like right over here. Yeah, right there, or right here. You would have got in, okay? Or you would have waited to break through this support where the price is right now, and you could have got in over here much more safely. Because this one, would have done its little, I call it the scare stop. Usually, a lot of times I've seen this pattern happen over and over again, where it puts in a high retracement, double top, or higher high, then comes down, and then they bring the price back up, but not to the top, just close to it, close enough just to scare the caca out of you. Caca! Yeah. And then you get out of your trade with a loss, and then they slam it down. That happens so many times. I cannot believe it. But anyway, what would have kept you in the trade? The 5 below the 7. The 5 did not cross up. See? Because in my pip snagger system, if you're in a trade, in a sell trade, and then the 5, the slower moving average, I use the 10 and the 21, or the 7 and the 21 now with pip snagger. So if it crosses back up, then you get out of the trade, okay? Because it's probably a loser, turned into a sell fake or something. So anyway, yeah, so you would have got in here, and it went down a lot of pips, man. Like, oh, not really. 40 pips. Okay, so let's look down here now. We have a low, a retracement, and a lower low, right? See that? Doody-doo. And right there. Boom. So you would have got in right here, long. Put your stop below S3, support 3. You know, it's about 16, 17 pips. Went up 19 pips there, went up 28 pips top there. And look what's happening here. Put it on the 15. Now you see on the 15, okay, the 5 is above the 7. We're in an uptrend right now. We're in a retracement along the way, okay? So we go back. If you don't want to trade against the upper time frame, chart, you will not. There's divergence here. Let me show you. It's a high, retracement, higher high. Wow, this is a long video today. Holy shit. I hope you guys are enjoying my trading knowledge. Okay, so we need the 5 to cross down now, below the 7. And then maybe down we go again. I don't know. Maybe yes, maybe no. But if you don't want to trade against the 15-minute trend, see, this 5 is not going to cross below here. Okay, it's just going to probably keep going. So this is how you weed out a sell fake on a lower time frame. See, we're coming back up now. Anyway, that's it for that. And we already looked at that. Oh, over here. Let's go over here now to the NASDAQ. Let's go slumming. Let's go slumming in the NASDAQ. Look at this shit. Oh my God, look at that crap. Oh, whoever does this, oh, they love to do this. Oh, they do. You know how many suckers they had buying it in here? And up it go almost to the pivot and right back down again to S1. And then this chop, and then up again, and they sold off the VWAP. Yeah, the VWAP. I kind of laugh at the VWAP, but hey, a lot of traders, new traders, they use the VWAP, right? And they use their supply and demand zones. I'm not saying it's bad. It's not how I trade. Anyway, I'm old school. What can I say? I've been here for 22 years doing this stuff. So anyway, it's a mess, as you can see. There was divergence right here to buy it. See? Oh. I moved that. Did I move that? I had it drawn on here. There. Yeah, it was a buy trade right there. Let me put the arrow. So this is the only trade I could see is right there. But you know what? That's at 16:30. That's when it opened. Do you really want to buy it when it opens? Anyway, if you stuck with it, it went up 36 points to the top. That's it. Let's look at the Dow. What did the Dow do? Well, there's divergence here if you can make it happen. Yeah, I didn't draw it to this low because I don't know if this would have worked out. So I know it's going to work out here. See? It's divergent. So you would have got in right in here. Boom. And so you got in there. Went up 100, man, on the Dow. But you see how you would have been buying right here at resistance? Right here, you would have been buying right at the resistance of the U.S. session. Okay, let's look at the S&P. Oh, yeah. Sloppy choppy. Not good, not good. No, not good. Yeah. I don't even want to try and look for divergence in that mess. That's just a mess, man. Okay, so did we look at oil? Yeah, we looked at oil. This is a mess, too. There, we covered everything, ladies and gentlemen. Hurrah, hurrah. Anyway, I just want to say once again, this is Jason here, trying my best to teach you all how I trade divergence. It's a beautiful thing. Been trading it over 10 years now, and I believe it works. And I show you every day that it works. So anyway, you guys have a great day, and good luck and good trading.